there are many paths to success in the stock market, and I humbly want to share with you the one I took. From Vanguard ETFs to cannabis stocks and Bitcoin, I've tried it all and ended up with a portfolio that has massively outperformed at least the overall stock market and the S&P 500. Welcome back to another video. Hope you enjoy this one. It's a bit of a special one. I plan to brag to you how well I've done investing over the years. Now for this video, I want you to drop me a comment with your entire portfolio, your investment strategy, and how well you have done compared to the overall market since you started. Gonna be interesting reading them. And as always, subscribe if you like the video, hit the like button if you want to stay tuned for my next ones. Timestamps in the video, let's get going. Now, the average individual investor on the stock market only makes about 2% a year, which is kind of odd considering you can make 8 to 10% a year if you just put your money in an index fund or ETFs. And I remember when I started researching the stock market, when I first started investing back in 2013-14, I quickly realized that passive investing and index funds were supposedly the way to go. I mean, why wouldn't you? You can beat 90% or so of all investors, amateur to professional, with one click, just buying an S&P 500 index funds. So that's what I did. Now, in the beginning, my go-to ETFs were DIA, SPY, and QQQ. So I covered the Dow Jones, the S&P 500, and the Nasdaq. And with these three ETFs, I covered the whole US stock market, which I thought felt great. And it was. They were just chugging along at the same pace as the overall market, and I got a sweet dividend on top. So to begin with, over the first couple of years, I pretty much did just as well as the S&P 500. But luckily, when I started investing alongside these ETFs, I did pick up some individual companies, which happened to be Activision Blizzard and Amazon. Those are my first two individual stocks, and I'm happy to say 7 years later, they're two of my biggest winners. Now, in the coming years, I did add some more specific ETFs like VFH, VGT, VYM, and VEU. So I started branching out into more specific areas of the market, which turned out well, I must say. Now, before I continue on this video, I have to say that I got quite lucky with the timing of when I started investing. I started in the midst of what became the greatest bull run in history, and the economy had just picked up after the financial crisis. So I must admit that I got to try out and experiment with my investment strategy in a very accommodating market. So there's been some rough patches, but overall, I've been quite lucky, so do keep that in mind through this video. Now, in the coming years, so 2014 till 2017-18, I kept my ETFs, but some individual names started popping up in the portfolio, and companies like Take-Two Interactive, Nvidia, Waste Management, Alibaba, JP Morgan, Lockheed Martin, and Domino's Pizza started gradually taking over the portfolio. And in 2017-18, I finally decided to ditch my ETFs. And why wouldn't I? I mean, these companies that I picked up kept outperforming the market. So I clearly had an eye for picking good growth stories. So I finally decided, you know what? I can do much better than 8 to 10% a year, and I ditched all my ETFs, and I'm very happy I did. I mean, sure, statistics will tell you to put all your money in an S&P 500 index fund and never look at them again for like 50 years till you're retired. But some people can do a lot better. Sure, you probably won't, but at least you should give it a try. And if you keep finding companies that crushes the S&P 500, you shouldn't be afraid to keep on going on your own. So that's what I learned from this experience. Now, when 2019 rolled around, I felt like I had a really good hang of things, and I added Tesla and MongoDB. Again, I'm happy to say these two of my biggest winners today. At this point, I ditched all my ETFs, and when 2020 and Corona came around, it didn't stop me, and I picked up Nextera Energy, the Trade Desk, and Microsoft to my portfolio, finishing the portfolio I have today. And I added these names as the market was crashing, and I did my heaviest buying ever when the market was at its lowest in March and April of 2020, resulting in a record-breaking year for me, and it's been my best year so far. And my individual names have kept outperforming the market, doing better and better over time. And here's a list of my current portfolio, the price I bought my first shares at, what the price is now, and the total gain. Keep in mind, my personal return is lower than the numbers on this list because my dollar cost per share has gone up since I initially bought my first shares, because the price has been going up and I've been buying as the prices have gone up. But this is basically how well these companies have done since I became an investor, which I think is the most important thing. I bet on these companies crushing the market, and they did. And in some of the names, my total return is the same as these numbers. And so over the years, I have, of course, made plenty of money in the different companies I've held over the years. Here's a total list of all the companies I've been invested in over the years. I think this list is way too long, but that's how many times I had to be wrong before I got it right. And I'm sure in 7 years, my portfolio will look completely different than it does today. But this just goes to show that if you keep trying, making errors and correcting them, your portfolio will ideally become better and better over time as you make these big mistakes. Now, I've never really lost money on any investment, but some have just really fell short, and I've invested in the company only to find out 2 or 3 years later that I don't believe in this company at all. And sticking to mostly American tech-like growth stories has also been a great strategy for me. I think this is the best part of the stock market, and it gets investors excited very easily and very quickly, which have also made the gains come easy for me. And I was never afraid of buying into companies at a really hefty valuation like Tesla, Nvidia, and Amazon. They were expensive when I bought them, they are expensive now. And a lot of people might think I was stupid for buying them then and stupid for holding them now. But wait, hold on, what was that? Sorry, I can't hear you over my 1000% gain. But in all honesty, don't be afraid to buy into big growth stories. They might be expensive now, but trust me, in 10 years, they're going to be even more expensive, and you've made a lot of money along the way. Now, if I had to take a wild guess at my annualized performance since 2013, so how much money have I made with my portfolio each year, I would guess somewhere between 30 and 40%. I have at least doubled the S&P 500, I'm quite sure, since all of my big investments have been huge winners, and I'm up 300% plus on multiple of my biggest investments. But for the first years, so 2013 till 2016, I was pretty much just chugging along, maybe doing 20% while the S&P 500 was doing 15 or something like that. And to sum up my strategy, and it's one I will gladly recommend to anyone, it is find a well-known US growth stories and slowly build your position as you're able to buy more and more, and don't look at the stock price or what the media is saying at any given time. Just invest in the companies you believe in and hold for the long term, but don't be afraid to sell if you decide that it wasn't the right investment for you and you can't see the way forwards for a company. All right, so drop me comments with your portfolio. How well have you done, better or worse than I have? Give me a topic for next video. As always, let's end this one. I'll see you in my next one.